friends, what is going on? It is K2 Investing here, coming at you with a quick video about a question I get asked all the time. How much money do I need to start investing in the stock market? Now, to be honest with you guys, there's not a definite answer to that question. There's no, you need this amount of money to be able to be successful and to be consistent and to be green. But what I can give you are 3 tips, some personal advice, and experience on how I was able to achieve success in the market so far. Up on the screen, you can see that Robinhood portfolio is sitting a little over 17K. I use Robinhood as my main brokerage right now, mostly because when I started, I didn't know what I was doing, and Robinhood is extremely user friendly. So the past couple of weeks, the market's been weird. It's been up and down a lot. You can see if I go across on the charts here, very red, but up and down throughout 3 months, a little more green. But my overall, I'm still definitely up. So I have nowhere to really complain, because as you go through the market, you're going to understand that there are going to be red days and green days as you just sit and watch your portfolio grow. So jumping into my tips here, my number 1 tip that I can give you guys is that first, you do not need to focus on a dollar amount, okay? What you need to focus on is learning the basics. And the 3 things that I find most important when it comes to learning the basics on technical analysis is 1, direction. 2, does it have a dividend in its history? 3, diversity. All right, so I'm going to jump in here to TD Ameritrade. I use TD Ameritrade as my technical analysis platform. It's free to sign up for. You can also use it for simulation trading if need be. But up on the screen, we have it set on the 3-year week time frame, and this is currently ticker symbol AAPL, which is Apple. Now, first thing we're going to focus on, direction. What we can see here is very clear is it's consistently going up and staying green. Of course, it has downs like everything else does in the market, but overall, consistently green. Next is its dividend history. If you go into dividend.com, you can look up Apple and see how frequently it pays out its dividends, for how long. Is it worth it? So if you do end up trading in a bad spot, it might actually be worth holding it, because you know the direction is good and you know you're going to be earning dividends on the way. And another thing to always keep in mind is that diversity. If you have enough equity in the market, it's extremely important to not put it all into one stock. For example, if I'm starting off with $1,000 in the market, should I buy $1,000 worth of Apple? No, right? You want to make your portfolio as diverse as possible. So say, for example, technology is having a red trend recently, real estate might not be. So just because one thing's going down, other type of goods could be going up, which can keep your overall portfolio either holding steady or consistently going green. My second tip is on percentage, okay? Growing your account by percentage rather than actual dollar amount is going to help you when it comes to keeping your emotions out of the market. So when I first started, as you can see, I definitely had a learning curve as I went down, and it was absolutely horrifying to me. I didn't know what to do. Even though I only started with, say, $500, losing that amount of money, I was like, oh my God, I'm down $50. To me, that was a huge thing, right? And what emotion does is it makes you buy and sell or hold when you shouldn't be. So if you don't focus on that dollar amount, but you focus on that percentage, it's going to help you tremendously taking that emotion out. So like for right now, as you can see with that day chart, I'm down. I am not worried, right? And that's huge when it comes to starting off in the stock market. Tip number 3, going back to that technical analysis over here with Thinkorswim, is having a trading plan. All right, when you decide how much money you can put into this market, you need to be able to trade smartly. Okay, you need to make a plan every single day. The night before I do any type of trading, I sit down at my computer with Thinkorswim up and I start looking at different options for me when I go in to buy a stock. Right? So what I do when I'm looking at actually buying a stock, I go into the 180-day 4-hour chart. And this is where I pick up great entries and exit points. So as you can see for Apple, you know what, actually let's go into main here. All right. As you can see, consistently going up, but here's where I would pick exactly where I want to enter and exit. So if you're just looking at the chart, what would be a good time for you guys? All right, I really focus on this blue moving average line. And what I'm going to do is I'm going to make sure that when it goes below this blue line, that's a good time to buy. And when it goes up above, that's a good time to sell. So before I even make a purchase, I'm going to be in here on this chart looking at exactly where I need to buy and sell, whether it be on a day, a week, or a monthly basis. Now that I have those 3 tips spread out for you guys, I want to talk about a few more things, okay? Can't stress enough is to make sure that when you're trading and you're first starting off that you do not focus on that dollar amount, okay? You really need to focus on learning and experiencing. My suggestion, okay, this is not what you have to do, but this is how I started, is to try out with just $100 in there. $100 is enough for you to buy 1 or 2 decent stocks and to really practice where your entries and your exits are. Because even if you only make, say, $1 on that trade, again, it's not about that dollar amount, it's about that percentage. You still grew your account 1 to maybe 5% off that one trade because you took the time to focus on your entries and your exits, right? Focusing on buying here and selling here rather than buying here, panicking, and selling here, right? That's what's important. Another thing that I want to give you guys some quick advice on is making a budget with your money. All right. One of the big things that everybody says, and I think it holds true to an extent, is do not trade or invest in the stock market any type of money that you're not willing to lose. So, for example, you're trying to make it quick and you want to throw your $2,000 that you have set aside for rent. Don't do that. All right. Figure out how much you're making. Figure out your bills, figure out your fund money, figure out your retirement goals when it comes to savings and your emergency funds, and then what's left over each time is what you're going to be putting into the market. So I'm going to go ahead and jump into Google Sheets here. If you guys see my other videos, that's what I also use to track my dividend payments. But this is also how I track exactly how much money I'm putting into the market every single time I add money. So as you can see consistently on a weekly basis, I'm adding about $100, right? Towards the end of the month, when I have a better understanding of how much I spent and everything, I might put a little bit more. Like here, you see I put 400. These 2 weeks I put 300 in. It all comes down to what I'm feeling that month. And also you can see back in July and August, I didn't put a lot of money in because I was actually on vacation. So I was spending a lot more of my fund money because all this money that you see here that I'm putting into the market is left over. It is money. I put my amount in my Roth IRA. I put away money in overall savings for retirement. I put money away for down payment on a house because I'm looking into getting into real estate, and I still pay my bills, and I still leave some left over for me to go out and have some fun. And at the end of the month, whatever I have cumulative is what extra gets put into the market. But I make sure to stay consistent by every week putting that $100 in. To say, for example, on average, I put 600 in a month. It doesn't help me any, in my opinion, to put that entire 600 in once that month and then go about my business. Because I know, especially as a beginner, when you see an opportunity that you think fits all your criteria and you dump all your money into it, you don't have any wiggle room to try to make better choices and to try to fix any mistakes that you might make. So making it consistent, figuring out how much I put in each month and breaking that out throughout the month, it gives me the opportunity to consistently be active in my portfolio and to make sure that I'm constantly watching my position sizes as well. So again, guys, I just wanted to give you a quick overall video of that major question that's hard to answer, which is how much money do I need to start in the stock market? Again, I think, don't focus on that dollar amount. Don't be putting a huge amount in when you're first starting. Start with a smaller amount. Figure out your way, your technical analysis that you do when you're trying to make your account grow. Because you're going to make mistakes, and it's better off to make mistakes with a smaller position size than with a bigger one. And I'm telling you, I'm just going to set you up for success in the future if you try to figure out these steps. So guys, I'm going to end this video like I always do. If you found this information useful and you like it, please hit that button, that thumbs up. If you have any questions or if you have any advice for any videos you would like to see in the future, please hit that comment section. Also in the comment section, I'm looking to make a a logo for my K2 investing. So if you have any input or any advice on that, go ahead and put that in the comments as well. As always, friends, I hope you stay green, stay classy, and make your moves with kinetic knowledge. Take it easy.